So with us again is Troy Bergman from John Adams and Renee File from the Brook in Ferndale, and welcome both.
Thank you.
Renee, just in general, that Ferndale, Royal Oak, Hazel Park type market, can you tell us a little bit about what's going on in prices and inventory?
Yeah, so the Ferndale Royal Oak market's really competitive right now. We're seeing it really more of a seller's market. So there's inventory shortages, and we're seeing a lot of buyers competing for the same houses. So it's really important to, stay on top of your game, have your, be ready to go when when you see the right one, because getting there first, getting there early, getting your offer in right away is very important in this market.
Yeah, and similar to what Corey talked about for pre-approvals, that goes the same for the move-up buyer too.
Absolutely.
In knowing what program is best. So Troy, can you tell us a little bit about whether it's what I call traditional type mortgage programs or some differences that the move-up buyer could look at?
Yeah, absolutely, Larry. So, it's always a good reminder, and I heard Corey touch on this, that there are so many good programs available when you are putting less than 20% down. I just took a look this morning at my last 10 borrowers that have applied for financing, and three of those 10 put 20% down, and 7 of them have ranged anywhere from 3 to maybe 15% down. So 20% down is great, but there's a lot of good options when you don't quite have that 20%. One of the reasons that we're seeing people kind of lean towards putting a smaller down payment down sometimes too is the PMI, which is private mortgage insurance. That has gotten so much cheaper over the past few years. So if we take, for example, a loan amount of $200,000, a client that's putting 5% down, if they have a strong credit profile, low debt to income ratio, that PMI rate might only be $40 or $50 per month.
Wow.
So, that's very, very competitive and attractive to people. Whereas in the past, PMI was kind of a bad word. Nobody wanted to pay PMI, but something for new buyers to really consider if they need to put less than 20% down. Let's run the numbers. Let's take a look and see what that PMI is. The other thing, Larry, that we're seeing too for people that whether it's a move-up buyer or maybe their third or fourth house, whatever it may be, is that if they find a house that needs a little bit of work, a little bit of TLC, and maybe some of these clients even have 20% to put down, we're seeing them decide to put less down, maybe 5 or 10%, and hang on to some of that money in their pocket because the rates are so cheap and the PMI rates are so cheap. It allows them the flexibility to have some of that cash on hand for home improvements and renovations. So
those are great suggestions. So in other words, talk it out with your lender to see what's best. That's wonderful news. Hey, Renee, in the competitive market that we're in, multiple offers, 5, 10, 12 offers on a home.
Yeah.
What tips can you share with us when making offers, whether you're making an offer as a buyer or if you're a listing agent? What could sellers look out for as tips? Anything that you can suggest?
Well, in this market, I think communication is key. If you're a buyer and you're working with an agent, I personally always like to reach out to the seller's agent and find out what's important to that seller other than price. There could be a seller that needs extra occupancy that the buyer can offer after closing, and this as the seller is moving on to their next house. A specific closing date to meet their target closing date of their next house. Often I've reached out to Troy and asked him to give the seller's agent a call and just go over the profile of my buyer so that the seller's agent feels confident that my buyer will close the deal. And then there's other things you can do if depending on your loan product, you could see, I've reached out to Troy to see if my buyer qualifies for an appraisal waiver or if the buyer has some cash on hand. maybe they're only doing 5% down, and then they can use some of that cash to guarantee the appraisal if we were to fall short. You know, we're seeing a spike in prices on homes, so it's good for them to have that cash on hand and be able to guarantee the appraisal to get the deal done.
That's great. So do you ever, as a listing agent, do you ever reach out to the other lender to verify or confirm?
All the time. I think that's important to do. And especially in this market, when you're looking at multiple offers and you're representing your seller, you want to make sure that the buyer you go with is solid, you know. So, and I really appreciate getting those calls, and I know I've gotten feedback that that sellers agents also appreciate when Troy reaches out. So it's great.
Yeah, and to all the realtors that are listening out there, you know, rates is they're still very, very low, but they have ticked up a little bit over the last few days. You want to make sure that the borrower still qualifies for what is on that pre-approval letter. So good information.
Yes.
Renee.
Thanks.
Yeah, thank you. Troy, again, in a low inventory market, one of the stressful things that a seller has in the, you know, that's going through the seller's mind is, okay, I have a home to sell. I want to move to that next home, but I don't want to sell and be homeless and not be able to find something. Can you talk a little bit about what a bridge loan is and how our bridge loan works?
Yeah, absolutely. So the bridge loan is a program that John Adams Mortgage has had for maybe the past 3 years or so. And it has been a huge, huge resource and asset to our buyers. And the bridge loan is a great program for somebody that is in need of getting that equity out of their current home to use as a down payment for their next property. So maybe they don't have the money saved in the bank, or they don't want to pull from the stocks or retirement accounts. They've got a substantial equity position that's important in order for us to do a bridge loan on their current home. Because one of the things that we look at is that we will allow them to borrow up to 75% of their home's current value. So just for easy math, if your current home is valued at $100,000, we can do a bridge loan for you at $75,000. And that $75,000 will pay off any existing mortgages. So say if you have an existing mortgage of $50,000, well, then we're able to take that leftover money of $25,000 and use it towards a down payment. So the bridge loan is something that we're having conversations with people daily. The other nice thing, as Renee had mentioned, that we are in just such a competitive market right now. The bridge loan allows you to make an offer and eliminate that contingency. So, that's a huge, huge feather in your cap. Right now we're seeing if you go in to make an offer in a competitive situation and you have a contingency there, your offer probably gets moved down to the bottom of the stack. So the bridge loan is a huge, huge resource for realtors, for buyers, for everybody to know about. A couple tips on guidelines and things that we look for in order to qualify. First off, we do have to qualify you with both mortgage payments. So you'll have your bridge loan payment as well as the new home payment to qualify. And we'll look at both of that when we kind of look at the whole debt picture. You also have to have your current home listed on the MLS prior to closing. And that's something that oftentimes that's a natural progression anyhow, where people are listing that property, but we do need to see that property listed on the MLS prior to closing on the bridge loan. And so many times we have clients that say, geez, I'm a little concerned about making 2 mortgage payments, moving forward. But more times than not, we're seeing that they're selling that house before a payment ever even comes due on the bridge loan. So again, overall, that bridge loan is something for everybody to be aware of and take advantage of when the situation's right.
Awesome. Thank you both very much, Troy, Renee.